Good afternoon. This is Chris Brecher with the Simpler Stocks free video for the weekend edition for September 12th, 2016. So you see it's about 43 minutes before the bell. I'm probably going to jump into the live chat in the last half hour just to go over some ideas in here. So basically, just so you know, this is what we've been talking about on the premium side for weeks. First thing, bonds down 117, bonds breaking the 170 level. Not just the bonds, our bonds, but the JGBD, which is the Japanese, betting on Japanese rates going up, was the tell. That when that started going up, that was a good tell that our bonds were going to go down. This is betting on Japanese rates going up. Look at the daily chart of this. Boom. Right there. If you don't think that's significant in here, look at a weekly chart. Even more significant. It took back 2.5 years of losses in 3 weeks. Big deal in there. Usually the Japanese market is the leader of world bonds. When their rates start going up or their bond market goes down, the first thing you should notice in here is that means our bonds are going to go down. And sure enough, when we cross that ATR trailing stop, that's been all problems. Going right down to the support that we've been talking about for weeks on the premium side. The thing about this is interesting. You might say, why are we going in here and why are we looking at futures? Because if you saw a stock that looked good, but you see the bond sell off, and then the bond sell off make the ESs break their bear wedge that I've been warning about, the whole idea is stocks that have good chart patterns are less likely to work. And that's the whole reason that every morning, the first thing I do is I publish stocks that look good, that I have futures, and show future stocks. I usually show futures charts. I show the ESs, the NQs, sometimes the TF, definitely the bonds, gold, the crude oil, sometimes the dollar, the transports, and so on. This whole thing in here I show because when one cog starts to unwind, then the rest do. I've been showing this on here, this bear wedge in here. The key in here wasn't to try to draw something fancy. The key in here is to notice the more times you can connect a point, the more important. As somebody did mention correctly on the chat today, isn't a bear wedge by nature an uptrend? It's a contraction of volatility. That is why you get a squeeze. You get a warning. And the key is not to anticipate and short in this area. You get your head handed to you. No doubt about it. You wait for the break and then the little oversold rally and then you sell it. And it worked to perfection today. A lot of our clients made a lot of money. And the ones that didn't make a lot of money at least got out of the ones that looked fantastic, the charts, and got out yesterday when the warning signs were there. If you don't know what I mean, ALK looked fantastic breaking out and now came to test the breakout. Look at this little head and shoulders intraday, and you had to be out on the opening today. You had more than enough chance to keep most of your profits in there. So in here, just to sum up, we have the ES is down 40. NASDAQ down about 91. Russell down 31. Really getting pounded today. Bonds, like I said, way down. Gold down. Crude oil down. This is like anti-QE, which is ironic because you have the whole idea about the Fed possibly tightening. Dollar up. This is all what could happen if the Fed tightens. Advanced decline. This is pretty incredible. 180 advancers. That's the least amount of advancers I have seen in a long time. Only 180. And remember, because bonds are down, you're not getting the flight into the interest rate sensitive stocks like the utilities. Everything's down. Transport's down to 202 points. China down. Germany down. This is all about higher rates. You might ask, why are rates so important? A lot of metrics say that our ESs and world markets are insanely overvalued. On the other hand, if bond yields are at 350-year lows, things are bound to be overvalued. The whole idea about that is you have nowhere else to put your money. That's what makes a bubble. That's been the whole criticism of the Fed in the first place, that they care more about the market than they care about really stability, and that they're creating their own bubbles. When you get the bonds start to sell off, you get real quick revaluations of the entire spectrum of assets. And that's what you're getting in 2 days. you're getting a huge move revaluing stuff. The whole idea in here is, where do you go now? First thing is, I've been talking since back here that bonds, if they broke 171, would go down 7 points. That's 164, but let's round off to support. Let's just be logical here. The more times you touch, the more important. You touch right here, that's 166. Guess where the bottom is? 166 today. Second thing, ES is on the left. Same thing, where's support and resistance? Support is obviously prior little bumps down here. So you had a little support here. We blew through that. Little support there. But when you get this violent a move, if you don't think that's violent, look at a 78-minute chart, and I think you'll see what I'm talking about. Whoa, look at that right there, falling off a cliff. Whole idea in here is, when you get that violent a move, you have to expect major support is what you have to look for. That's right here. Look at this coagulation of moves right in this area. That would be about 2120 right in here. Remember, the faster you go up, the less support you have on the way down. That would be right in this area, about 2120. So that's what we need to look for next week. I never thought we'd get there in one day. I mean, just unbelievable. Today was when the ES is rolled to the December month. So that's why you see that weird little gap in there. If you want to change this instead to the SPX to get a better reading, then you have to look right there. 21.25. See those prior tops? That becomes support really about 21.23. We're only 15 points from that, so just keep that in mind. That's something I'm watching very carefully in here. So in our, just so you know, we still have the $7 30-day trial, and what that includes is the chat room in the morning. And I'm trying to put this up quickly because I've been real busy watching all these stocks for everyone. But it includes the live chat in the morning from 9 to 10 in the morning. Includes the email alerts, is where I do index and futures charts, stock trades and chart ideas, and a lot of these have worked wonderfully. And option trades just have worked fantastic in here. So I hope you get a chance to take us up on this offer. We've had it literally thousands take us up on the offer, and we have one of the highest retention rates in the industry. So thanks again. I will talk to you later.